Good morning, good afternoon, good evening, my amazing subscribers. You're welcome to Accounting Simplified, where we give you simple, practical tips that would help you grow your business and record your daily transactions so that you can be in charge of your business. Remember, knowing your numbers is the right way to making your profit and managing your business. Recording your transaction is essential, and today I'll be guiding you on step-by-step process on how to set an accurate price for your product. Most times, most business owners don't know the right price to set for their product. They are in between setting a price that would attract their customers, enable them make profits, and enable them cover all their costs. And if that sounds like you, you'll be covering those things today. I'll be guiding you in a step-by-step process on how to set the right price for your products so that you don't chase away customers, you cover your costs, and still make profit. After all, we're in business to make profit. So hold on, get yourself a cup of coffee or water as we take ourselves through, as I'll be guiding you through step by step process. Now, the first cost we'll be looking at is your cost of purchase. That is the cost it costs you in terms of naira or dollars to purchase the product. That is your purchase price. Okay, another cost you will need to consider is the cost you incur to preserve that product. I don't want to use jargon, so I'm going to use simple terms. Costs you incur to store the product. And when I say cost you incur to store the product, it includes costs like shop of the rent. Sorry, the price of the rent. Now, the rental cost of the shop you're staying, where your product is going to be kept, will be recognized and will be considered when determining the price of your product. The light cost, electric bill you pay for you to be able to maintain that shop will be part of the cost you're going to recognize. Your data cost, and if there is things like every salary. So I'm talking about every other cost you incur for you to be able to maintain that product in a good state till you sell it. And most people have shops where they keep their products. Some also, if for instance you're into food business and you have a fridge where you keep the raw material used in making that food, let's say you bought meat, tomatoes, all those food items you bought, you keep them in a fridge. If there's a particular storehouse where you keep them, the cost you pay for paying for that store will be included. If you have to pay for light bill, as the case may be, when you put those products in the fridge, that cost will be part of it. So every other cost you incur for your product to be in its best condition till the point of sale will be recognized when calculating and determining the price you're going to sell your product. Now, the last cost you're going to recognize is your profit. What profit do you think you should earn at the end of the day for producing this your product? If it's 100 naira, if it's 200 naira, if it's 300 naira, whatever is that cost is the fourth cost we are going to consider when determining our price. So you're going to consider four costs, like I've mentioned already. These four costs are the costs you're going to consider when determining the price of your product. Please, if you're getting value for what you learn, I would like you to give this video a thumbs up, a like, share, and subscribe. When you do this thing, it helps the video meet other business owners that need this information. Just like it got to you at your doorstep, you should be able to also help it get to others at your doorstep. So I'm imploring you to please give this video a like, a share, and subscribe if you're getting value for your time. Let's continue with the video. So I'll be giving us a typical example. which you'll be viewing on your slide, which you'll be seeing very soon on the screen, so that you can understand better. So I have a question to ask you. So one might ask, why do you need to incorporate and consider all these costs before determining your selling price? Why not just add what you assume to be your profit margin, or what you want to be your profit margin, to the cost of the product you purchase, that is the purchase price, to determine your profits? And the reason behind it is because you're in business to make profit, and you're only making profit when your selling price deducted, when your selling price less your expenses gives you a positive figure. That if, for instance, when your sales, let's say 500 naira was what you realized from your sales, less the expenses. Expenses is not just the cost of the product you purchased. Expenses include the cost of products that you purchased at the purchase price, the cost you incur to bring that product from the point of purchase to your shop, and every other thing you've done to keep that product to be in perfect condition for you to be able to sell it. Those are your expenses. And so for you to really make profit, you must incorporate all those expenses plus your profit margin before you can now make profit. If at the end of the day your selling price is less than all the expenses, expenses here are two. In fact, there are three. The cost you incur to purchase that product you're selling, the cost you incur to transport that product from the point of purchase to your shop, the cost you incur to make that product to be in a sellable condition, the cost you incur to keep that product in the best condition before you're able to sell it. All those things are cost. And so the cost of your shop should be part of the cost, should be incorporated when determining your selling price. The cost of the transport, the cost of packaging your item, the cost of the light bill that you pay to run the shop. The shop is there. Why? Because you have product to sell. Why do you have light? You have light to keep your product in good condition. So any cost you incur for you to keep your product in good condition, for you to be in the best condition, for you to be able to sell it, must be incorporated when determining your selling price, when determining the price of the product. Let's say, for instance, you buy drinks, for instance, and customers like their drinks cold. Now, if you buy drinks and you want to just say, okay, I bought the drinks maybe 10,000 naira, for instance, and it's okay, I want to make a profit of, say, 200 naira. If I say, okay, I bought that 10,000 naira is for, let's say, 10 bottles. So if I divide 10,000 naira by 10 bottles, I will have what? 1,000 naira for each bottle. If I say, okay, plus my profit margin, plus my margin, the profit I want to make is 200 naira. So I'll now say that 1,2. Now, if a customer comes to your shop and now you see your product is 1,200 and the customer touches your product and it's not cold, do you think that customer will buy? If it's a customer that just came from a very hot condition, no. Most customers like their drink cold. So anybody that wants to sell his or her drink should put that drink in the fridge for a customer to enjoy that product. If a customer now come and say, I want my product not cold, that's a different scenario. And that is not a very common scenario. So you should incorporate every cost you incur to make that product be in sellable condition. Let me give you another condition. If you buy meat, you're into production of food, and you buy meat, you're a food vendor, and you don't put that meat in the fridge, for instance, do you think that meat will be in the best condition when you want to use it to cook your food? No, it would have spoiled. If you bought the meat, say maybe today, and you didn't put the meat in the fridge, you didn't even cook it also, you just left the meat like that, without putting it in the fridge, without cooking it, for instance, and then next tomorrow or in 2 days' time, you want to now cook that food, do you think that meat will be useful? The meat would have spoiled. You cannot use that meat again because the meat would have spoiled. And if the meat is spoiled, can you use the meat? No, you can't use the meat. You can't cook your food again. Who will buy the food again? So the money you spent in buying that meat will be a waste. Why is it a waste? Because you did not preserve the meat. Why didn't you preserve the meat? Because you don't have maybe NEPA lights. You didn't buy lights. Maybe you don't even have gas for you to have cooked the food and kept that food. So you see, all the cost that you incurred for that product to be in the best condition at the point of use should be considered before determining the price of the product that you want to sell. And that is why it's very, very important before you determine the price of your product, before you determine the selling price of your product, you must consider all the costs you incur for you to make that product in a sellable condition. It's not just the cost of purchase, the cost of purchasing the product only. No, every cost you incur for that product to be in its best condition are the costs you should recognize when determining the selling price. So even the example I gave, the issue of shop rents and light bill, that shouldn't be the only cost you incur, depending on the kind of product you're selling. So every product have the cost you incur for that product to be in a sellable condition. Therefore, every cost you need to incur for that product to be in sellable condition should be considered when determining your selling price. Hope I'm making sense. All right, now let me give you a real life scenario. So let's say, for instance, you bought 100 pieces of a particular product and those products cost you 40,000 naira. I'll be showing this slide so you can see it properly. And let's say you incur 3,000 naira as your transport to transport those products from the market to your shop. You spend 3,000 naira bought to the market and back to your shop. Now you package this product for 2,000 naira. All right. Okay, if you sum all that together, I'll give you how much? 45,000 naira. Now, your shop where you're going to keep that product, you pay a rental fee of say maybe 240,000 naira for the year. Now, for the month, you divide that 240 divided by 12, that will give you what? 20,000 naira for each month. Are we together? Okay. And let's say you pay light bill 3,000 naira. And let's say you also pay you also bought gas 2,000 naira. Are we together? And that's how much? 20 plus 3 plus, so that give us how much? 25,000 naira. And let's say you want to make a profit of say 100 naira. That is the profit you want to make per product. Now, for you to determine the selling price of your product, you're going to consider all those costs. Cost of purchase, cost of transport, cost of packaging, shop cost, cost of light, cost of gas. If you add that up all together, that'll give you how much? 70,000 naira. Now, this 70,000 naira, you're going to divide it by 100, which is the number of products you have purchased and you intend to sell for the month. Are we together? That'll give you what? 700 naira for each product. You now add your 100 naira, that is the intended profit you want to make. That'll give you what? 800 naira. So your accurate selling price, the price at which you should keep this product to enable you make real profit, and at the same time enable you be in business, enable you not to cheat your customer, is 800 naira. Anything you sell less than 800 naira, except you are satisfied making a profit of 15 naira per product, you can now sell at 750 naira. But anything less than 700 naira, you'll be making a loss. Are we together? So look at the slides which I'm showing you for better clarification. Please, if you're getting value for this video, I'd like to give the video a thumbs up so that people can see that yes, you appreciate the work that I'm putting in this video. You're also encouraging me to put out more videos that will help business owners, and it's going to also make it possible for other business owners like you to be able to watch this video and also learn how to price their product. Most people are in business but they're not making profit, they're just selling. And you're not there to sell, you're there to do what? Make profit. This is Accounting Simplified, where we guide business owner on how to make smart decisions for their business. We also guide business owners on how to keep record of their transactions and guide business owners on how to set the right price and other tips to help you grow your business. If you're getting value for this video, please subscribe, like, and share, and put a comment if you'll be trying this. If you'll be trying this method in determining your next selling price, please let me know in the comment section. Let me know in the comment. Now, it is very important for you to know that your profit, your business rather, not your profit, your business is there for you to make profit. And the cost of your product should be able to cover not just the cost of your purchase price, not just the cost that you spent in buying that product, but the cost of running the shop, the cost of your transport, the cost of your light bill, the cost of your data, every cost you incur in your shop, your selling price should be able to cover it, not from your pocket. You should not sell products and not be able to pay for your shop. No. Because if you do that, next month you might not be in business. The only way you can assure yourself that you'll be in business next month is if you incorporate the cost of your shop in every item you sell. If you incorporate the cost of your light bill and every cost you incur for you to run that shop in the selling price of your product, that way at the end of the year, because you added that cost in your selling price, you'll be able to recover that cost back. You're able to pay for your rental cost next month. You'll be able to pay for your light bill next year, as the case may be. At least after a year period must have run for your shop rent have expired, depending on, let's say it's the 1 year rent. That is the estimate. That is the instance you're using. You're able to be in shop next year. You're able to pay for your light bill and every other cost you need to run your business. You'll be able to incur that cost. It is not right that you spend money from your pocket to pay for your shop, to pay for NEPA bill. No, your business should be able to recoup that cost for you. Should be able to cover that cost, and then should be able to make profit. That is when you are making profit from your business. Don't tell me that I bought products for 10,000 naira and I shared it among the products, among the quantities, maybe 100, and I have 1,000 naira, and I want to make 200 naira like profit, and I have 1,200 naira only as your profit. If you're doing that, you're not doing the right thing. I would like to encourage you to make the right decision today so that you can cover your cost. That's what it means to cover your cost. Your shop bill, your NEPA bill for the shop should be incorporated in that cost of every single item that you're selling in your shop. If you're not doing that, start doing that today. And if you see that, you'll be able to cover your cost. And that money you have spent out of your pocket, you can save it and use it for something else. Are we together? So you can see we come to the end of today's video, pricing our products. We'll call it a wrap. I will see you in my next video. Don't forget to like, share, and subscribe. Give the video a thumbs up if this added value to you. And if you feel that I'm not doing right, please kindly let me know in the comment section. Nobody's a master of everything. Are we together? Remember, knowing your numbers is the right step to knowing your business better, is the right step to understanding your business, is the right step to making more profits. Accounting Simplified is here to help you. And if you have any question regarding your business, kindly send a mail to ngozik@sps@gmail.com or leave me your question in the comment section. Thanks for stopping by. Wish you all a very beautiful day. See you in my next video. Bye.